Have you ever wondered why some businesses thrive while others collapse despite having the same resources? Today, we dive into the untold secrets of managing money for business success. This is not just about numbers, it's about survival, strategy, and the choices that can make or break your empire. Imagine waking up to find that every penny you work for is slipping through your fingers because of one overlooked rule. In this video, you'll learn the 5 rules of managing business money that top entrepreneurs swear by. Rules that can protect your dream from disaster. Managing money in business isn't just bookkeeping. It's understanding cash flow, forecasting risks, and planning for scenarios that you haven't even imagined. Most businesses fail not because they don't earn, but because they mismanage what they have. Today, I'll guide you through these rules with real-life scenarios, showing how every financial decision can shape your company's future. From unexpected emergencies to opportunities that demand immediate investment, the right rules can mean the difference between bankruptcy and breakthrough. By the end of this video, you won't just know the rules, you'll feel them, internalize them, and be ready to implement them immediately. This isn't theory, it's battle-tested wisdom from entrepreneurs who have faced failure, learned the hard way, and come out stronger. Stay with me till the end, because I promise the last rule will completely change how you think about money in business. And if you value your business future, don't forget to hit that subscribe button. You won't want to miss the next insights that could save your company. Now that you know these 5 critical rules, it's time to act. Tracking every penny, separating finances, building an emergency fund, controlling debt, and investing wisely are not just lessons, they are lifelines. Entrepreneurs who implement them see stability, growth, and freedom from financial anxiety. Remember, knowledge without action is useless. Begin today, apply these rules rigorously, and watch your business transform. Your dreams deserve structure, strategy, and protection. Don't let ignorance or carelessness destroy what you've built. If this video added value to your business journey, subscribe now and join a community that learns, grows, and wins together. Hit the notification bell. Your next breakthrough could be just one video away. Remember, managing money wisely is not optional. It's the difference between surviving and thriving in the business world. Understanding the psychology of money is as important as numbers. Emotional decisions, fear, greed, or impatience can destroy a business. Entrepreneurs often make high-stakes decisions under pressure, ignoring data or long-term consequences. A retailer once expanded aggressively during a hype period, driven by fear of missing out. When the trend ended, inventory remained unsold, staff were overextended, and debt accumulated. Emotional spending, emotional investment, or panic-driven decisions can erode even the strongest financial foundation. Cultivating discipline, patience, and strategic thinking creates a mindset that protects your business. Money isn't just a tool, it's a responsibility, a reflection of your decisions, and a mirror of your preparation. Treat it wisely, and it will reward you. Ignore it, and it will betray you. Forecasting is the next step in mastering money management. Predicting income, expenses, and market conditions isn't fortune-telling. It's strategic planning. Businesses that anticipate challenges survive. Those that don't are consumed by them. A logistics company failed to forecast rising fuel costs. They continued operating at previous rates, believing profits would cover expenses. When costs skyrocketed, margins vanished, and bankruptcy loomed. Forecasting allows you to simulate scenarios, plan for the unexpected, and stay ahead of crises. Effective forecasting combines historical data, market research, and intuition. It enables smarter decisions about hiring, expansion, and investments. Predicting the future may seem impossible, but preparation based on accurate forecasts is your best defense against failure. Monitoring your financial health is more than checking bank balances. Regularly reviewing statements, comparing budgets with actual performance, and identifying trends can prevent small problems from becoming catastrophic failures. Business owners who neglect this are walking into traps they cannot see. Consider the example of a boutique that appeared profitable but had declining margins. The owner only realized the issue after months of losses, at which point recovery required painful layoffs and restructuring. Regular financial monitoring allows you to spot issues early, make informed decisions, and adjust strategies before it's too late. Technology can be a game changer here. Automated tools, dashboards, and analytics can give real-time insights, allowing you to react faster than competitors. Knowledge of your financial position isn't just power, it's protection. The 5th and final rule is investing wisely. Profits must not sit idle, they need to grow. Entrepreneurs often make impulsive investments, chasing trends, or copying competitors without understanding the risks. Every dollar should have a purpose: increasing revenue, improving efficiency, or safeguarding your business. A tech startup invested heavily in a trendy platform without analyzing market demand or ROI. 6 months later, the platform became obsolete, and the business lost a substantial portion of its capital. Investing blindly is a luxury no entrepreneur can afford. Wise investment decisions require research, patience, and sometimes the courage to say no to opportunities that seem attractive but are risky. Successful entrepreneurs diversify their investments, balance short-term gains with long-term growth, and continuously evaluate outcomes. Treat your profits like soldiers in a strategic war. They must work, multiply, and protect the company's interests. Ignoring this rule is like leaving your army unarmed in enemy territory. The fourth rule is controlling debt. Debt can be a powerful tool, but when mismanaged, it's a silent killer. Many entrepreneurs take loans for expansion without fully understanding interest, repayment schedules, or risks. Debt isn't evil, but careless borrowing is. A restaurant owner expanded aggressively with multiple loans, assuming future profits would cover repayments. When a seasonal slump hit, payments became unmanageable, suppliers withdrew support, and employees left. The business that once thrived now teetered on the edge of closure. Proper debt management requires realistic projections, contingency planning, and disciplined repayment strategies. The key is balance. Borrow only what you can comfortably repay, use debt to leverage growth rather than cover weaknesses, and track every obligation meticulously. When handled wisely, debt can accelerate success. When ignored, it can dismantle everything you've built. Rule No. 3 is building an emergency fund. Every entrepreneur believes they are immune to crises until a sudden expense appears and shatters that illusion. Equipment fails, clients delay payments, or markets crash without warning. Without a reserve, these events can wipe out your cash flow overnight. Imagine running a thriving business when a key supplier suddenly doubles their price. Without an emergency fund, you face impossible choices: cut staff, delay orders, or take on risky loans. Businesses that survive these shocks are those that have set aside a safety net long before disaster strikes. It's not about luck, it's about preparation. An emergency fund doesn't need to be enormous, but it must be sufficient to cover at least 3 to 6 months of operating expenses. This buffer gives you time to respond strategically rather than react desperately. Think of it as a financial parachute. When the fall comes, you don't crash, you glide safely toward recovery. The second rule is separating personal and business finances. Entrepreneurs often blur these lines, thinking it's harmless to cover a personal expense with business funds or vice versa. But this seemingly small mistake can spiral out of control, leading to legal complications, tax issues, and devastating audits. Your business is a separate entity, and treating it like a personal wallet is a slow path to failure. A business owner once shared how they funded a personal vacation using company money, believing they'd pay it back later. Months later, taxes were due, unexpected bills piled up, and there was no clear way to track what belonged to whom. The business almost collapsed, not due to lack of revenue, but because of the confusion between personal and business finances. Separating accounts isn't optional, it's crucial. The solution is simple but requires discipline. Open dedicated accounts for your business, keep personal and professional expenses completely distinct, and use clear documentation for every transaction. This not only protects your assets but also creates transparency for investors, banks, and potential partners. When you respect this boundary, your business can grow confidently, free from hidden financial pitfalls. The first rule of business money management is tracking every cent. Most entrepreneurs fail because they underestimate the power of record keeping. Without a clear view of income, expenses, and liabilities, you're driving blind in a storm. Imagine trying to navigate a city without a map. You might reach your destination by chance, but the risks are enormous. In business, uncertainty without control is a recipe for disaster. Knowing where your money comes from and where it goes is the foundation of every successful enterprise. Consider the story of a startup that earned millions in revenue yet went bankrupt within 2 years. They spent recklessly, ignored invoices, and never reconciled their accounts. They had products people loved, but they had no idea how much they were actually spending on operations. Money vanished silently through neglected subscriptions, unnecessary perks, and unchecked expenses. This isn't rare. It's a common scenario that repeats itself worldwide. Learning to track your finances isn't just a habit. It's a survival skill. Implementing a proper tracking system can feel tedious at first, but it becomes your business's lifeline. Every receipt, transaction, and debt must be accounted for. Digital tools, accounting software, or even a simple ledger can save you from catastrophic mistakes. Think of it as building a fortress around your money. Every brick is an entry recorded, every wall a safeguard. With this foundation in place, your business is prepared to face unforeseen challenges without crumbling.